You hire a crew, they sign an independent contractor agreement, and you assume the liability is off your shoulders. The standard industry practice is straightforward, leaves your entire operation exposed. A piece of paper in a drawer cannot monitor what happens after the ink dries. When an accident happens, Kentucky's workers' compensation system operates on a very simple premise. Every workplace injury requires a payer. If the subcontractor cannot pay, the state invokes Kentucky Revised Statute Section 342.610. This law automatically transfers full financial liability directly to the primary hiring contractor. It does not matter how airtight your subcontract is. The state completely disregards hold harmless agreements. That certificate of insurance you filed away only proves that a policy was active on the specific day the document was printed. The legal requirement isn't about having a piece of paper on file. It requires active, paid-up insurance coverage on the exact day the physical labor is performed. When you treat risk management as a one-time administrative hurdle, you leave yourself completely unprotected against these strict statutory overrides. To see exactly how this triggers, look at a standard job site. You hire a roofing crew for a project in Louisville. On day one, the crew lead hands you their certificate of insurance. The paperwork checks out, and the tear-off begins without an issue. You process the documents and assume your company carries zero liability for those workers up on the roof. Look at the timeline. 45 days in, the subcontractor misses a payment and their carrier cancels the policy. You receive no notification. The crew keeps working. 2 days later, a worker falls from the roof and sustains a major injury. The liability status of your job site changed invisibly. A routine accident is now a direct financial threat to your company. Immediately following the accident, the state's workers' compensation system steps in to locate the responsible insurance carrier to fund the medical care. They check the subcontractor's records, verify the policy was inactive the moment the worker hit. This hierarchy chart shows the state's next move. Since the middle layer is empty, they trace the chain upward for funding. The system strips away the independent contractor label, reclassifying you. You are now the statutory employer. This liability isn't intermittent. It remains fully active and enforceable for the entire duration that any worker is physically present on your site. You do not have to do anything wrong to trigger this. The rule applies even if your site safety is flawless and the injury was entirely the worker's fault. The statute is engineered as a strict financial fail-safe. It forces you, the hiring contractor, to absorb the administrative failures of the crews you bring on board. The immediate impact hits your own insurance policy. As the statutory employer, your carrier must cover the initial emergency room bills and ongoing medical costs. You are also mandated to cover the indemnity payments, replacing the injured worker's lost wages for the entire duration of their physical recovery. But the upfront bills are just the beginning. A compounding financial threat arrives long after the worker is healed. Look at this projection of standard premium costs over 5 years. Your premiums are dictated by your experience modification rate. The state permanently injects the subcontractor's claim into your loss data. This single claim drives up base premiums by 30% for 3 consecutive years. Beyond the direct cost of the premium increase, an inflated experience mod can automatically disqualify your firm from bidding on lucrative municipal contracts or large-scale commercial developments. Any margin you saved by hiring a cheaper, unchecked subcontractor is immediately wiped out by the compounding penalty applied to your operational overhead. A single piece of unverified paperwork in year 1 mathematically guarantees depleted profit margins for your entire company through year 4. Collecting a certificate of insurance at the start of a project offers exactly 0 ongoing protection against this liability. The Kentucky Workers' Compensation System evaluates your liability based entirely on the active status of the policy at the exact millisecond an injury occurs. To combat this strict legal standard, you must implement a 30-day continuous audit cycle. This means discarding the filing cabinet approach and actively verifying policy status with the carrier. This continuous loop catches lapsed policies before workers arrive, effectively blocking the statutory liability transfer entirely. For insurance agents, you have a professional obligation to help your contractor clients transition away from passive filing systems and build these active audit protocols. Agents can find the specific tools and training required to build these statutory employer defense systems at workcompprofessionals.com. For employers, the responsibility is entirely yours. You must proactively close subcontractor coverage gaps before allowing anyone to swing a hammer on your property. Employers looking for practical, step-by-step operational guidance to manage these vulnerabilities can start at conquercompcosts.com. Do not wait for a claim to reveal your exposure. Audit all of your active projects today and verify that your subcontractor protection is actually in force, not just collected in a folder.